Good morning, Market Wizards. Today is 8:02 a.m. Chicago time. It is Wednesday, the 24th of February 2016. This is another Trader Bite, early nourishment for your trading mind. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Looking at the overall sentiment, today we have oil down 3%, currently 3.25%. It's off by $1 and some change. Gold is up 1.8%, trading at $1,240 plus. Treasury futures are up 0.6. Treasury bond futures are up 0.62%. The 10 years up 0.32%. The Euro Bund is up 0.27%. Asian markets closed with the Nikkei down 0.85%, Hang Seng down 1.15%, and the Shanghai up 0.9%. The Japanese yen is up 22 bips. U.S. equity, Eurozone equities, the DAX is currently down 2.3%, the FTSE down 1.45%, and the CAC 40 down 2%. U.S. equities down 0.85%, and the U.S. dollar up 15 bips. So you can hear the pattern in there. Money is moving to safety. The risk appetite, again, just like yesterday, is off. Market is allocating to safety, and the overnight trade shows why. I'm not going to go over any news, but the key thing that I saw was that the British pound is below $1.40 for the first time in 7 years, since for the first time since 2007. Actually, that's more than 7 years. Um, and so the market is a little jittery today. So that we have to take that into account into our play for today. Let's take a look at the technical picture here. As far as just to step back, as far as what's expected for today for economic releases at 8:45, 9:45 Eastern, 15 minutes after the open, we have U.S. Services PMI prelim 53.5 at 9 Central, 10 Eastern. We have new home sales. We're looking for 520. And at 9:30, 10:30 Eastern, we're looking for U.S. gasoline inventories. The expectation is negative 1.25. Distillate inventories negative 1.15. And crude oil inventories, again, adding 3 million barrels. As far as speakers, I see a fairly clear calendar here until a BOE speaker, Cunlife, at 12:10 Central, 1:10 Eastern, and then Fed Speaker Kaplan in Dallas at 1:15 Eastern and 12:15 Central. After the market, we're expecting Hewlett Packard um, to the estimate for that is 36 cents per share. Let's take a look at what we did yesterday. Okay, so let's start out really quickly. Again, the idea behind the Trader Bite is not to give you some sort of a plan for the day, but to help you create one on your own. Yesterday, this was the primary hypothesis: responsive buying as up to and as far as 39.40. This is from yesterday's video. You can see the video title down here. The expectation is the market is likely to push to get responsive into the prior day's range. Again, the idea is not that it's going to hit 39 and just turn around. I don't have those predicting powers, unfortunately. But the idea is that when it's responsive, that is the key area of resistance above. My stop needs to be above there, be above the 1940. And I talked about it several times yesterday. You might want to watch this video. This is about 13 minutes in. And then the expectation is for it to hit resistance, find sellers in that range, and then roll over and start dropping through the 1924 even, which was the mid. It's the mid, as I outlined here. It's 1924 even is the mid of this gap zone. this big gap zone, and it's expected to then tag 16, and then the extended target would be 14 and a quarter, as I had drawn here with this arrowhead. That was the expectation. And then we can look at what it did. I'm sure most of you know. Yesterday, basically it opened right where, just a little bit higher than where the trader bite had ended, and it pushed back up to 37 and a quarter. Could not get through 37 and a quarter. Could not push into the 39.40, although that would have been nice to close this. Since we have such a balanced profile up there, it would have been nice to close this point of control. Would have given me a better trade location. Just couldn't get as big a bite as I'd liked, but it pushed up 37 and a quarter, and then it rotated down, hit that 1924 to take out the overnight low. So now it has fulfilled the overnight stat. It has fulfilled the IB stat. And then the next line in the sand was 2275. This microcomposite point of control, and you recall, if you're on Twitter yesterday, the point of control for yesterday's session until later was right at 2275, right in line with this point of control here. We also built this interesting high volume node here for a short period of time, which was at 31 and perfectly in line with this naked point of control from way back. So you could see that the auction, with the point of that, is not to say, see, I'm right, praise me. The idea behind pointing those things out is to say the auction is moving forward in a methodical way, that the market is auctioning properly. It ended up getting to the 16 quarter, or the 16 even, closing that, and then on the reopen at after the 315 close, we immediately tagged the gap, the closing gap price of 14 and a quarter. We have not done that in a day session. If we look at yesterday's profile, we'll see. So this is the gap zone that I outlined that we worked through yesterday. This is the entire gap zone here. You can see the mid is right at 24. This gap zone will stay on until we move back up through and test it from below. And you could, based on yesterday's action, you can and the profile, you can see that it was a long liquidation profile, a B-shaped profile, but also we have a fairly weak low. We finished up with a fairly weak low. The market closed fairly strong to the downside. I mean, fairly weak to the downside. You could see the market closing basically at the edge of the range. This was not a trend day down. This was a normal variation day. But essentially the market finished very, very weak. So this portends, or this basically predicts, that the market's likely to drift down in the overnight session. And that was what was expected in the overnight session. And when we look at the overnight session, we see just that. We see the market basically continuing its drift down right here. So this is where the overnight session reopened, and we see the market drifting down, attempting to push up again, pushing lower, attempting to push up again, and then on the European Open, which is about right here, the European session has been dominated by sellers all along. We end up with a double distribution profile with a cutoff point at 1910. So for this session today, you'll want to keep an eye on the 1910. But essentially, the big picture, and this is not a strong low here on the overnight low, so I expect the market is likely to push this low lower unless we get some news or something that is going to entice the market to push to seek higher prices. That's how things are shaping up. Remember, when I talked about the 1940, I don't remember if it was Monday or last Friday, I indicated that when we do take out a price um, like the 1940, basically a pivot point, the most likely scenario is that we push through it by a few points and we drop back down, and that's fairly common for this product. Here it is in the prior test of 1940, which is also the 50% pullback on the drop back in January, and it's a low volume node at 1940, a composite low volume node. The expectation was it would push through by a couple ticks, a couple points, and then it's likely to rotate back. And guess where the target for the rotation down would be? Um, if you're a market profile and you've been following for a while, you should know the answer. The target for a rotation back down is the point of control, the 1890. So to the downside, we're trading 1899.50 currently, and the low of the session has been 1896. We're just 4 points, 3.5, 4 points above it. But that puts the point of control in range here and makes the point of control a very, very big magnet in this area. So that's how things are shaping up. We are back into this massive balance zone here from the beginning of the year. And this is normal action. The market generally does not, especially a product this big, generally does not just break through and just keep going. Generally, it does poke through. With a balanced type market, you have the breakout traders hopping on, and then it just falls back off and pulls back to advertise for buyers. It's looking for substantial buyers below. That's why the market keeps auctioning down. It is seeking buyers, and it's likely to continue to seek buyers until it gets to the spot or around the spot where the most trading happened in that region and that area. The price where the most trading happened is called the volume point of control, the VPOC, and that's how things are shaping up. So, with having reviewed the overnight session, having reviewed the daily, what is our plan for today? Again, this is a 60-minute chart. First of all, we're going to extend this profile across to see where our point of control is. The point of control has not moved. It's at 19. Well, it's moved up just a tick or so. It's moved up to 1923. That's key for this area. The market is trading on the edge of this profile. We're moving down into the gap zone below from the 17th. This little gap zone to 92.50. So this is where I'm expecting it to push through and down into 1890. So today's plan is the inventory being short overnight, strongly short actually. If we look at the overnight inventory, we see that price and the delta are negative. The inventory is measured against the prior day's close, which is up here. Current price is much lower. And then we are measuring the delta from the open of the session to where we are, negative 17,000 or so. The inventory is generally short, and therefore there's a fairly decent expectation, fairly decent probability that this market is likely to get responsive initially and to push up. And the limits to its pushing up is that 1914 area. 1914, 1916 are the limits. That doesn't mean it needs to push up to 1914 or 1916 to get short. It just means that those are the substantial areas where sellers are likely to act strong and step in. They could act at any point on the responsive selling spree, and then I expect it to push lower into this 1890 would be my key target for hypo 1 being the MC point of control, and then beyond there it's likely to push through to 1892 to 1892 and an 1892 1890 1890 is the key target. Sorry, I'm a little hazed here. I have a head cold. And then it's likely to push into the next key area below, which is the dividing point on the composite. So the next key area below is 1880.50 right here. And that's the extent of the range. That gives us about 20 points of range for the day, which is about what we would expect um, given a selling push. So that's the primary hypothesis. Responsive buying, just like yesterday, responsive buying up. Looking for sellers, it's likely to find sellers ahead of the 1914, 1916 area, and I expect it to rotate down and get to 1890 in today's session. Anyway, I'll keep it short there before I go off on a tangent. Again, hopefully you did something with yesterday. Yesterday was a really solid auction day. Hopefully you did something with it. If you did not, if you lost, then just try to understand, spend time to understand what it is you could have done better. And for most people, in my exposure, day-to-day exposure to traders, most people know what they need to do. Execution, that they don't believe in what they do, and so they don't do it. And so that's something you need to work on and set goals for on a weekly basis and measure your performance on a weekly basis. What was my plan is almost always plan. Watch your risk. Good luck.